All right, Dennis, if you're ready to roll.
Let's do it, Tom.
All right. Hello, everybody. This is Tom Randall from GoldenCare, and I want to welcome you to this webinar today. We're going to have the pleasure. I'll show you Dennis's my ugly mug up there in a second, but I want to welcome you all to this webinar today. We're excited to give you the opportunity to see really a new extended care solution. And one of the nice parts about it is that it's a great product and great opportunity for those who are either deep in the woods in long-term care and short-term extended care, or those who are just looking for other options. No matter what product you're selling, this has a wide bandwidth, and it's going to be hopefully a great opportunity for you to help more folks out there. And again, today we won't do a lot of dog and pony show on GoldenCare, but make sure you check out our website, and we'll talk at the end about the next steps to make sure you get appointed if you're not already, because this is just one of the things we bring to the table. And again, Dennis and I have had the pleasure of working together for many, many years. We've been getting long in the tooth. I'll give each other a hard time, but I've been here in 27 years now at GoldenCare, and I've had the pleasure to work beside Dennis in most of those years, if not all of them. So at different levels. And Dennis brings a ton to the table. He's been a trainer out there for trained tens and hundreds of thousands of agents and consumers, and we've had the opportunity, both of us, to not only work on the agent side, but to work with consumers directly in the extended care arena. So hopefully we'll bring just another solution today, another arrow for your quiver. And Dennis, I'll let you jump in, say hello to the folks, and then we'll get rolling.
Hey, thanks everyone for taking time out of your busy schedule. We think it'll be time well spent, and we'll give you a little background here. Tom will share, and then we'll kind of lay the foundation for this particular solution, and then we'll introduce the solution to you. And along the way, if there's questions that pop up, you can put them in the chat. And as Tom said, we've been doing this a long time, had the good fortune of writing over $1 billion of long-term care premium with our GoldenCare relationship and design products. And so some of you may know us, and some of you may be new to us. So Tom, I'll turn it back to you, and I'll let you kind of just set the stage here.
You bet. Again, for those of you who know Dennis and I see a lot of the people I glanced over at the attendee list, and I see some real wily veterans who have been out there up to their necks in the trenches of long-term care and extended care for many, many years, and I see some new faces and new names on there as well. So, you know, if anybody knows myself or Dennis for that matter, or most of my team here, if not all my team at GoldenCare, you know that we're very passionate about what we do, because this is one of those things that's just such a necessity out there. You know, 70% of Americans are, once they hit age 65, we're going to need some type of care. And especially when you start looking at not just long-term care, that it is a great, very leveraged product that has a few more moving parts and a little bit tougher triggers to get the benefits of the policy. But when you get into some of the short-term care products we offer, et cetera, it really, that 70% number really comes to life. So at the end of the day, we know with all the baby boomers, and Dennis and I have done this a long time, as many of you on this call have done, and you know, we always talked about that year 2030. Boy, when 2030 hits, we're going to have a nightmare. All these baby boomers are going to be at the time they're having claims, and we're not going to have enough care to go around. And most importantly, we're going to be in trouble at the government level with all those budgets and stuff. And I could bore you to tears with full day trainings on Medicaid and all the problems we're going to have with Medicare and Medicaid and just our health in general in America. So I'll get off the soapbox, but I do want you to know it isn't really important in what we do. Whatever products you're offering out there, the Americans really need to have protection. Most people out there have never had a conversation about it. They're scared about getting shoved into a facility when they don't want to because of that whole COVID outbreak. So it's really important what we do and what we can get you guys in the field to do. And that's why we're excited to bring you these different types of products and protection levels out there. So we know with long-term care, like Dennis said, we've been up to our necks in that for a long time. We've been very successful. Helped with Mutual of Omaha, bringing them from number 10 to number 1 in the individual brokerage market for long-term care traditionally. And we write for a lot of the big products out there, and we'll talk a little bit about that in our intro. But we know that we have a shifting market right now. We know that there's a lot of people living longer ages. Those baby boomers are getting older and older. We got a lot of gray hair, and some of these solutions, because just the way the market is, are not as good options for some of the older folks anymore that they used to be because of the underwriting, et cetera. So when you look at the protection options available, Dennis, I'll just keep rolling on this part. It's pretty basic stuff for most of you out there. that, you know, you had traditional long-term care, and we'll talk about kind of the development of the market over the years, but we have Mutual of Omaha, the #1 player out there, and NGL and Thrivent. Dennis and I give each other a hard time because when we started this market, and when some of you on this call started in this market, you know, there was 130 some companies selling long-term care, traditional long-term care. Now it's so top heavy in the brokerage individual market. There's literally those three you see on the screen are the big leaders in the individual brokerage market, and then there's a few other career only, Mass Mutual, New York Life, et cetera, that are out there as well. But very, very far stretch from what we had in the old days. And because of that, we have the existing hybrid link markets out there like One American, Nationwide, Securian, certainly aren't exhaustive lists at all. A lot of great products there that do a great job with these life or annuities that have, we kind of throw the net wide and call them hybrid or link products. Some great there, and I'll let Dennis jump in if you want to give more details. But at this point, we know that there's also the comprehensive short-term care products out there. Again, not an exhaustive list, but some great players there. Manhattan's Omniflex is a new one that we helped bring onto the market, and we're excited about. Wellaby is a new player that's in 10 states and expanding next year. And GTL Recover Cash is an old standby player that's been great and a leader in this industry. And the same with Aetna Recovery Care, et cetera. So there's new ones coming out with the short-term care. And that's a whole nother discussion about how that market's expanding. And then the home health care only plans are there as well. So the big thing we're going to talk about today is, you know, traditional long-term care hybrids are great. We know, we'll show you how the market expanded to throw the net wider. But even with that expansion, there's still some of those, we call them less healthy people in the trouble states for short-term care. There's some certain states that we'll talk about today, and there's several of them, but like California, Florida, New Jersey, Connecticut, and several others that just absolutely just don't want to play ball in the short-term care or home health care only markets. So we need to have solutions out there that'll work well for people. So Dennis, I don't know if you want to expand on that anymore, or we can jump right into the landscape.
Yeah, no, Tom, I think that's good. I think you know, showing the landscape and you know how the market has evolved. And we've kind of broken this down to where it looks like a puzzle, if you will. And again, some of you are writing all these various products, so we're not telling you anything new today as it relates to you know, probably the existing landscape. And we know that the challenges, it can be twofold. It can be a challenge from an underwriting standpoint, and Tom's kind of lining this up here where you can see the traditional marketplace, the hybrid marketplace, kind of capturing what we just talked about on the previous slide. But really, it's also about where they are from a state availability standpoint. And that's really the challenge. We've been on so many of these webinars that we've done where we're talking about this extended care option, and people say, oh, I live in California. Oh, sorry, we can't help you. Oh, I live in Florida. Sorry, we can't help you. And again, you know, we try to have solutions, and the one product on this puzzle piece that you see here that is in all 50 states is this little non-insurance product that we have called True Freedom, which is a home care, it's membership hours. But that's not what we're going to talk about today. We got something else that we're going to talk about. So Tom, I don't know if you want to pick up any more discussion there, or should I just jump in and keep on going?
Yeah, I think with this group, you know, we don't have to go into that deep into the whole things about why the hybrid plans came, and then throwing the net wider on the short-term care plans, and then those home health care only plans being just a great little complement with much, much easier underwriting. I think a lot of folks on this call either know that already and understand where we're going with that. So I don't think we have to spend any more time on that. Let's jump right into our solution that we're going to offer today and see what we can do with it.
Okay, great. You know, I'll pick this up right here, Tom, in terms of what you saw in that missing puzzle piece was Chubb. Chubb is probably familiar to most of you. It's arguably the largest publicly traded insurance company in the world with some 200 billion in assets and A++ rated. And what makes what we're going to talk about today unique is we have an association for entrepreneurs, and this association's been around 30 years. And I want you to think of it as the wrapper. I want you to think of it as the entry fee, if you will, to get access to the Chubb product. So think of it like a AAA membership. Think of it like a Costco membership card. we're talking 80+ million, maybe even 100 million of individuals, and they break it down to what they call the gig economy. And what we're really talking about with this platform, the AFE USA platform, is Chubb is one of the products that they have on this particular platform. We're not going to spotlight the others because they're not really in the LTC space. If any of you are working in some of the other voluntary benefit areas and have an interest in, critical illness or a vision plan or hospital indemnity, please reach out, and with your contract that you're going to have, your contracting is actually through AFE USA, the association, because the association has the exclusive with Chubb, and GoldenCare happens to have the exclusive with AFE for anyone that wants access to that product. And so back to the membership story, the classic membership, and the first thing that you need to do with your client is your client has to enroll as a member. And the membership is it's a nominal cost. It's $4.99 a month. And it comes with some benefits. The first being that you've got this decreasing term. So depending upon their age, you can see here, this is underwritten by MetLife. This is not, again, the solution we're talking about. This is just what comes with the $4.99 membership, and then the additional AD&D benefit. And so depending upon if you've got a client that's 45, they're actually getting $7,000 of coverage, and by the time they're age 80, there's no life insurance and there's no AD&D. But this comes with that $4.99 membership. And Tom, it may be good just to take a moment and show some of the other, and by all means, we're not here to really promote membership. We're only trying to give you a little bit of a background so you know what your clients can expect when they join AFE USA to get access to the Chubb product.
Right. And again, Dennis, thanks. That's one of the things for some of you, you'll never go to this because we don't think this has to be a major part of the sale, because you can see the membership benefit, or the membership fees are relatively small, and that gives them access to the main solution we're going to talk about today. But we do have this available in PDF or PowerPoint form, whatever you prefer. And at the end of the day, you get that really nice little life deal. That alone, it has some value to it, obviously. And then it's some of the usual suspects that you see if you're a member of AAA or some of those other things like Dennis said. And I'm not going to go through and read all these to you today and bore you to tears with the details on them, but this does have all the fine print at the end of this PowerPoint. That's why it's 40 pages long, because you're going to see it starts out with like Office Depot and Avis, et cetera, and then Home Chef and Costco and UPS. And again, it's all that usual suspects you can see, and you can see it's alphabetically here. So there's a lot of different little side benefits that if you do feel like you need to bring that up to show people that there are different things available with this membership. We just wanted you to be aware that it's there today. And again, if I've zipped really fast, there's all the details and all that fun stuff that you'd want from that side of it. So I don't think we need to go deeper than that even today, Dennis. I think we want to jump right in and show these folks what they came for. And that's
yeah. I will just say one point, Tom, just on that Answer Financial, because that's a 400 member call center. Answer Financial is owned by Allstate, and it's really a shopping service for your auto and homeowners insurance, and they really do a great job, and it's a free service to get a good, better, best quote. So there's some good value there with the membership, but here it is. This is where the rubber meets the road. So what we're talking about with the Chubb product is a level benefit term to age 121. And we're talking about a long-term care true 7702B rider that's built into this product. And so again, like any form of a long-term care policy, traditional or hybrid, the triggers are the same, the 2 out of 6 ADLs. And so then you can access 4% of the death benefit, and it's paid monthly for 25 months. So the concept of being able to get some coverage, and some of you have age bands that probably you work with that are all over, but this is age 19 to age 70 is the issue age. And if they want to qualify for the 25, 50, or 75,000 face amount, it's only that very first question: are you active, working a minimum of 30 hours per week?
Right.
Now, whether you're 1099 or W-2, Tom, it doesn't matter.
Yeah, and I did want to point out, because this is from their slide deck originally, and just make sure you clarify on the 5+. That's if you want to have list bill. this can be sold individually to individual people. You don't have to have 5+, right, Dennis?
Yeah, we're taking a group certificate, Chubb, on the what we'll call the larger work site side of the house, where you're talking about Fortune 100 companies and associations that have tens of thousands of members. This product plays in that side of the house. What AFE USA was able to do was to go to Chubb and develop a master contract where they took the same group certificate, but they were able to bring it down to one individual life. Now, having said that, when we say groups of 5, Chubb and most of the other players who are in the big work site and group and association space, they don't want to deal with things that are 500 or lower. So you could have opportunities, where you can go down and talk to companies or associations where you just know that we can go all the way down to 5 lives. But for all intents and purposes, many of you on this call are looking at just a place to go as an alternative when you've got a decline or a difficult case that you just don't want to put the client through that long, exhaustive underwriting process. And so this is as close to guaranteed issue. We call it conditionally guaranteed issue because of the fact of just answering that question. Now, there is 4 additional questions, Tom, as you're aware, to get to the 100,000, 125, or 150, and these are literal questions. So if the client has missed more than 5 consecutive days of active work due to an illness or injury in the past 3 months, and they say yes, then that would preclude them from getting that higher face amount. Same thing with question B, same with question C, the AIDS question, and the same with question D, which is, have they been to a licensed practitioner or medical practitioner within the past 6 months, excluding flu, cold, or routine physical? Now, we know there's some exceptions to that, and this is not a plan that's designed to do a big pre-screen that goes to the underwriter. We are getting some clarification on that question D as to certain situations. They're mainly looking, obviously, for conditions that are causing people to be getting ongoing treatment or ongoing follow-up. And so the premiums are guaranteed renewable. They're portable, which means that if the client did this in a work site situation or was part of an association, is how they enrolled. And the billing was done on a list bill basis, they could still keep it individually. Most of you will be signing them up as an individual, so the portability is not really a factor. But the premiums will never increase, and they're guaranteed to age 100. After 100, there's no premium that's due, and the coverage terminates at age 121. There's a couple other wrinkles to that, but again, back to the 4% on the drawdown of the death benefit for that tax-free 7702 long-term care benefit. It really is a life with long-term care, and it's a great alternative. Again, when clients are trying to plan ahead and they're a little frustrated that they got turned down by XYZ carrier, or they've got certain conditions that maybe they are in pretty decent health, but maybe they're not the tallest, and maybe they're have a little bit of a disproportionate when it comes to their weight. So you're not dealing with any of these other aspects about comorbids or anything else other than those questions that we just listed for the bigger face. And think about that. If you could get a client $150,000 of death benefit, 4% of that to draw down for long-term care is $6,000 a month, tax-free.
Yeah, and absolutely, Dennis. And another thing that I just want to hit on, first of all, the guaranteed renewable, even though it's on a certificate, that is what it says it is. You don't have to worry about any of those problems that anything to do with that group side of it. It's definitely a guaranteed renewable product for your clients. It's portable, like Dennis said. And even the 75,000, remember, if you wanted to just have the 30 hours per week that they work, if you look at that, that's a $3,000 policy per month, and that's pretty strong for having just about guaranteed issue, right? So there's a lot of to look for in this plan, especially the availability of it as well. So go ahead, Dennis.
No, I was going to say, and because it is on a life chassis, there is some paid up benefits after 10 years. There is a terminal illness rider that becomes available after 24 months of, I'm sorry, after the plan has been enforced for 30 days, and someone has a life expectancy of 24 months or less. So there is ways to get dollars out of the plan, other than just triggering that 4% benefit. And maybe, Tom, to make it easier, because this is showing the states where it's not available, let's talk about availability, because this is really why we were so interested in having access and wanting to bring it to our distribution. We have a lot of our long-term care partners out there that are maybe organizations that you might be doing some of your business through, that we wanted to make sure that we could quarterback this for really for everyone, and that's why we have the exclusive. But here's the state list on the there's 28 states currently, but the big states that we want to draw your attention to is, look at that, California. Some of you on the call might be from California. Some of you might be from Florida. Some might be on the East Coast. Again, as Tom mentioned, Connecticut. Look at Connecticut's approved. That's hard to believe that we have approval in Connecticut. And states like New Jersey and Virginia are difficult states, but some of the big states, and we write an awful lot of business just across the board in Texas. And so there's some of the great usual states, and they will be adding some additional states in 2024 as many of the states begin to take a closer look at whether or not they're going to mandate that people have some form of long-term care protection, very similar to what Washington did with the Washington CARES Act. So look for that as an opportunity. And maybe, Tom, just a quick word on worksite, only because back in the day, we kind of were one of the real pioneers in the worksite space at GoldenCare. We took a carrier by the name of Life Investors that became Transamerica with at the time was called MGI underwriting, modified guaranteed issue. It was 3 questions. Well, now you don't have much different, and those were underwriting questions. If you look at the Chubb, those 4 questions that we talked about for the higher face amount, they're more lifestyle questions. They're not asking you about conditions. And so remember, if someone answers yes to any of those 4 additional questions, they're precluded from getting the 100,000, 125, or 150, but they can still get the 25, 50, or 75,000. So this is pretty much a solution that's going to be available. And I'm going to tell you, I think you're going to have some tremendous referral opportunities. And I think joining the association to get access to the product, to go all the way down to one life, it's really a small cost. So Tom, maybe you want to pick up and talk a little bit more about this slide here.
Yeah, you bet. I mean, again, you guys know this, and hopefully you've already seen just in this short webinar today that there are huge advantages. Hybrid plans in general with the life and long-term care, it gets rid of that use it or lose it, having that part of just the overall design. And then when you really look closer with these type of underwriting products, we've got people, a lot of us who've been in the weeds for forever in long-term care and hybrids, and even some short-term care. We know we have clients who were interested but just couldn't get through underwriting, whether they were declined or just didn't have access via field underwriting. This is a good opportunity as long as they're still working. You got some great opportunity to put a nice plan in place. And even some people who have some other, the existing 10, 20, or 30-year term, I talked about this hitting myself. When you get to that certain age and you start hitting 50, you realize, boy, when we got married and started having kids, I went out there and got all these great little term products. I meant to invest the difference, probably didn't get around to that. But I got a term policy, and all of a sudden, now I'm not quite as healthy as I was when I was 30 or whatever that was. And these plans are coming out, and people are going, you know what? I could use some more life insurance in general. My term policies are starting to mature, and now I need to look for some other options. So this is a really nice fold in for a lot of those folks who maybe are actually still underinsured because they got to the point when their house is starting to get close to paid off, or their kids are going to college, and now their term lives are starting to expire, and they can look at adding to their life insurance in general and have that great little LTCi rider that'll keep them safe there as well. So, and again, just to make sure you guys remember the way this situation is set up, a lot of you on this call are deep into long-term care, so you're already certified. But remember, the nice part about this plan is they have a unique situation where you don't have to get your LTC certification, that extra training to sell long-term care with this product, because of the unique situation that they're in. So that's an added benefit as well. So we know the sandwich generation, most of us on this call know what we're talking about there, where not only are they starting, they're finishing raising their kids, but now they're helping mom and dad. So they're getting hit from both sides. So they really understand the need for this. And this is a lot of what I talked about in my short intro today, saying we're going to see kind of the perfect storm again in this industry because of the fact that all these seniors are getting older and these baby boomers are maturing and getting close to claim age. We are going to be able to turn heads much easier than in the past. And again, that's such a plus, because for a while there, it was like, oh, we're stuck on coast mode, where it was really hard to get people's attention and talk about a need for long-term care, for extended care services and protection for those services, where now we know people are really, they're feeling it and they know it's coming up closer. So we're going to have you're going to see there's a good age band with this type of product, and you're going to have the ability to help a lot of people who maybe before couldn't get it. So again, we have life protection that you can get for the children at nominal cost. There's concern about their state. Remember the old Washington Trust experiment, quote unquote. We know that those things are coming. Their state's looking at that. They're looking at options, and this is a true 7702B plan that we hopefully will be able to step in and help with some of those folks feel like they get either added protection or maybe have an exclusion in some of those states. So again, we know the one thing about this market, 100% of the market's going to go out there and they're going to die eventually. So at the end of the day, we can look at anybody across the table or on the internet that a little additional life insurance isn't a bad decision. And because this policy is so flexible, it's, hey, if you don't use the benefits, you can use them at life. So you don't have to worry at all about that use it or lose it. So again, I probably stretched that longer than I needed to for most of you on this call, because it is, you know, pretty straight up and pretty straightforward. So Dennis,
Hey,
I don't know
Tom,
if you want to add anything to that.
Yeah, just one more point on that. Back to the children, you know, I think that there's an opportunity. Some of you have been in the pre-retirement, retirement mode and working only with those who are suitable candidates for long-term care in the mid-50s. But remember, health conditions strike people at all ages, and there's 40-year-olds who are unhealthy and 45-year-olds and 30-year-olds. And what I like about this product is that you can trim it down on that under 65 market. If you're somehow working in that health insurance market for those under 65, it's a great companion to give someone just a little $25,000 policy with that long-term care. Maybe they've had that experience, as Tom said, with the sandwich generation. And so it's a very affordable option to add on. And the key with that rider for the children is it's one rate for all kids. So if you only have one kid, you pay the one rate, but if you have 5 kids or you had 10 kids, it would still be one rate for all of them. And it's in 5,000 increments. So 5, 10, 15, 20, or 25,000. At age 26, they get it converted without proof of underwriting. So it's really, you know, you might surprise yourself again. It's anyone under the age of 26 that's eligible for that particular add-on. And so, Tom, I think you hit those points really importantly. And I know that everyone should know we have a website that's dedicated to this particular site. It's mycareprotection.com, and Tom's pulling it up right now. And it has really all the product information and some other information that just kind of gives you a little bit more, again, of an overview about why this fills the gaps and what your role is to inform and to educate and to persuade.
You bet. And this site again is mycareprotection.com, and you can see I'm going to go to the sales and marketing materials on there. And there's really everything you need to have to be successful out here again. And this is a living, breathing site like our other sites that we're putting together for different initiatives. And this will be something we can add to and make it stronger as time goes on. But you can see there's some nice little stats there. Overall, just a viewpoint of who this will affect, kind of like that slide we went through. And then you can go through and just get a bird's eye view of the classic membership benefits. There's training video collections, marketing assets for the agent to use, consumer marketing assets, etc. So everything you really need as far as videos on here. And I know we're expanding our video selection, right, Dennis? So we have a lot of good things available now, and it'll get better.
Yeah, this is Tom. That, you know, for the people on the call, this is the platform. So you don't go to a Chubb to enroll. You actually go to the AFE USA platform, and once you get an invite to get contracted, you'll also get a login to the platform. And the nice thing is there's 2 ways. And Tom, if you go back to that blue box, scroll back down to the consumer to the forms back up. I'm sorry. Right in there, if we went into the marketing assets, if you will, you clicked on that. That gives you all that information. There's an infographic. If you go to the forms, there's also information on how actually to enroll. There's information there that you can have that's available to you. There's the brochures, the infographic. There is some state-specific brochures you should be aware of from that standpoint. The nice thing is with this opportunity, you can enroll two ways. One, there is, if you hit the individual, that would be it. Yeah, and then scroll down, you'll see forms, and there's a phone assist. And the phone assist is when you're on the phone with the client, and basically you can complete the information, and then what it is it's a text to sign. The client doesn't have a wet signature. They basically, and this is a PowerPoint that walks you through so that you know exactly how to do that if you're going to transact business over the phone with your client. It's really very, very easy. It's a very powerful platform, and it's you're hitting the simple button here. And the other way to enroll is once you get your login, you will get a unique URL to you. And that is a link that you can send to your client, and that client can actually self-enroll as well without any signature or by you as the agent or even by the client. And Tom, that's that self-enrollment that's back on that blue. It's a separate PowerPoint that they have the opportunity to again transact both ways.
Okay. And again, this is all on the site, and it's one of the fun things with Dennis and I are different states doing this webinar. I'm trying to pull up what I think he wants you to look at that time, but everything is on the site. So again, we don't have time or want to have to spend the time today to go through and show you all these different things. But if you have an agent assist enrollment, it literally walks you through exactly what you're going to see and what to expect. And this portal and this platform and dashboard is a huge part of the benefit of this. You're going to be hopefully as pleasantly surprised as we were when you first see it, because they've spent millions of dollars putting that together, right, Dennis? And I mean, they've done a really good job of going out there and making it as simple as possible. Yeah.
Back to your rates, Tom, and here are the unisex rates. A couple things to remember on the product itself. It's a 90-day calendar day elimination. It's an indemnity-based product, and you can see both the smoker and non-smoker rates. It's about 30% load on the smoker, but this is, again, you can look at the rates monthly, or if you prefer to look at them annually. I know it's kind of a busy chart, but it's you don't actually have to have a quote engine or anything else. It's we've tried to take that step out of it for you, where it's very simple to be able to quote this either monthly or quote it annually. Another example of the collateral that's available in terms of the brochure. Again, you can enroll. When we think of workplace, we're also that's the individual piece right there. Individual brochure. Remember, it is on the group certificate. Most of the time, you're probably going to be enrolling the onesie twosies, but I don't want you to walk past opportunities. And I think you're going to surprise yourself when, especially if you are an agent that maybe is doing other things. You might be doing, again, the under 65 market. You might be writing some P&C, whatever it might be. Think about this: 5 lives. I mean, it could be someone who owns a dry cleaning store, or someone who has, a hair salon and has just 5 employees, and they want to reward those employees, and they're willing to do it on a list bill basis, whether the employer pays for it or just does a list bill and then takes it out of the employee's paycheck. And you get great assistance from the folks at AFE USA. They'll help you with the census, and they'll actually do the enrollment. They've streamlined that enrollment process where they're there right with you to help you in that process. So it's fantastic as far as the opportunity.
Right. Somebody on the chat asked about inflation, and there isn't inflation on this. It's just the base life, different levels that they offer, right?
That's correct.
Yep, and again, the big thing that we try to do here at GoldenCare, number one, is reach out and search out and find great opportunities that are going to fit niches and fit different gaps that you might have, from throwing the net as wide as possible and helping as many people as possible. And part of throwing that net wide is coming up with solutions like this to help you folks go out there in the field and help as many people. And we don't throw you out of that plane without a parachute, so you can come to this site, again, mycareprotection.com, and you can have pretty much anything you'd need to be successful in this. And if there's anything you want to add to that site, you can contact anybody here at GoldenCare, and we'll make sure we talk about it and see what we can do to help you out as well. Because most of our sites we're doing are certainly living and breathing sites that we could try to keep adding to and make them as beneficial as possible for you. I don't want to talk about the incentive, Dennis, or keep going on? Or
well, I think, Tom, I was just going to talk, and we're not going to talk specific compensation because some on the call might be license only agents under a career shop and some might be brokerage agents. But what I can tell you is it's a lower comp threshold, because remember, you're taking normally a fully underwritten product that is down to one life, and it's down to really that one question: are you working 30 hours a week, or the 4 additional questions? But it is level for all years and it pays monthly. But your client has the opportunity on that platform, whether you're doing the phone assist or the self-enrolling, where they can either do bank draft or they can do credit card. It's so easy and convenient. And by the way, when your client signs up, you give them access. You set up their password so they go back onto that same platform if they ever need to change a beneficiary or any of those member benefits that they're getting, such as that MetLife decreasing term and the accidental death benefit. They'll get a certificate for that goes into their own account that's electronic that you've set them up with once you're enrolling them. So it's all very streamlined and really it's very efficient. And 7 to 10 days after they are enrolled, they'll actually get a physical certificate mailed to them by Chubb, but they also will have everything available to them that's online when you set up their member account in the same platform that you just enrolled them in. So it's pretty, they spent millions on this platform, folks. And I'm telling you, this is, I think you're going to surprise yourself on the business that you'll write. We have had some of our LTC people, some very significant writers in California that would normally be writing, a Mutual of Omaha or a One America, that are now finding that they just don't want to mess. And maybe they could, at the end of the day, really work hard and spend 45 or 60 days, but the client sometimes just doesn't want to go through that hassle of the phone interview, they asking for medical records, they asking for the records of a specialist, everything else. And so these agents are beginning to hit the easy button, just say, listen, on this one, I'm just going to go this route. And the same thing right now on the work site. We've got some group opportunities in California, in Montana, and surprising you in different states that are surfacing with agents who normally are not wearing that association or work site hat, but they're suddenly seeing opportunities. And remember, this may help you to, again, cross-sell other services that you may have available to you, depending upon what your core business is. It may not always be just long-term care, but I think there's a great wide range of opportunity, Tom, with ages 19 to 70 that are available for those on this call.
You bet. And I did have a couple people type in a couple questions. One of them was waiver premium, and that wouldn't be a waiver premium on here because of the fact that it's got the life insurance in the background. Correct me if I'm wrong on that, Dennis. I can't
That's
imagine.
correct.
And then life insurance doesn't decrease. This is actually a permanent it's a term, but because it's term level or level premiums to age 99, then the premiums stop, and then you have coverage up through 121. So basically that's everybody. So nope, the life insurance doesn't decrease unless, of course, you're taking benefits out of the plan on the long-term care side. But then it's just dollar for dollar. I've got several other questions coming in, Dennis. I don't know if you can see the chat too, so you can help out, but I'll try to see if I can weed through them. Is that okay for questions? May as well now.
Oh, yeah, absolutely. Yeah, you bet. I mean, I think we got a few minutes here left, and let's address them. And again, we'll make sure that anyone that has something that's more specific that we couldn't address, maybe you're an agency that's on this call and you're looking for how this can help your agents, and maybe there's questions like that. But Tom, let's
Yep.
address them, and we'll also tell them as a follow-up what they can expect from a standpoint of next steps.
Yeah, you know what? I got a nice one here that again I know the way they did their deck. Somebody asked about, I know you need to target 5 or more employees, but is this product can be sold to a self-employed person who has no employees? So again, the 5 or more was literally more for the list bill, right? So we want to make sure we know that this is definitely okay for self-employed people as well, for just individuals. Maximum age was 70, right? 70, Dennis, for
19 to 70, and it's taking the group certificate all the way down to one life. Just the 5 is only if you decide that when you have a association or a work site situation, this product plays from a list bill with the 5. That's really, but again, by and large, most of you are taking existing clients that you're in front of, whether it's a couple or a single, and maybe that's the challenge. You've done some pre-screening, or they've already been turned down, and you're looking to be a problem solver, and that's what this is all about. So yes, self-employed, W-2, it doesn't really matter on that one life, as long as they're working 30 hours a week.
Same thing with a real estate broker who's a 1099 type employee. Somebody who's
right.
Yeah, perfect. Real quick on the indemnity versus reimbursement on the long-term care services.
Yeah, it's indemnity, but you have to be getting those services that are listed, and so there is the same care coordination to make that happen. But again, it's all streamlined. And remember, Chubb does a huge job, and one of the most significant riders on the big work site. And what we're doing is with the AFE USA relationship that they have been able to negotiate with Chubb, is there, normally if you were working with a big Fortune 500 company, there'd be a certain participation rate for them to get basically completely guaranteed issue. We call this conditional guaranteed issue because we still need to ask and make sure that they're active at doing what they're doing, whether they're self-employed or W-2. But the indemnity is it's indemnity based, and it isn't reimbursement. And so and that's how these other products. It seems that's where things are going today. They're moving away. There's some carriers that obviously in the traditional long-term care space, and even one fairly dominant player in the asset base that still has reimbursement, but this is indemnity based, and again 90-day calendar day elimination.
Perfect. Thanks, Dennis. And I'm sure, like I said, you're drinking out of a fire hose first time you've seen this. This is a very simple concept. I really think you're going to be pleasantly surprised again when you do what hopefully most of you on this call will do, is take the next step. Make sure when you get you'll get a little invite afterwards based on the email that you signed up with, of course, and you're going to get a little thing from our staff. It'll come out, and I don't know for sure. Dennis probably knows better how they structured this one, but a lot of times it'll be a link to a recording if the recording worked out well, and it'll give you access to go ahead and start the appointment process and get some more information that way. And we already told you about the website, and that'll be a link on there to the website as well, I'm sure. So,
right. Yeah, and I'm not sure, all the collateral is really on the website, so there's probably not going to be a bunch of other PDFs, but as Tom was pulling up those PDFs, you can see that we have those PDF readily available, but really everything that you need is on that mycareprotection.com. The invite is, remember, the invitation is going to come from, it'll be coming from someone, we have a special form that you'll click on, and you'll be able to get set up. And your contracting is with the AFE USA, because they have the master contract with Chubb, and they're the ones that pay the compensation, and it's paid on a monthly basis. And remember, when the client enrolls, they can either enroll by bank draft, or they can enroll by credit card. That's a nice, very few, as in the insurance space, very few insurance options today have a credit card opportunity. So this is, again, you're hitting the easy button. Once you do this, what we've seen already in our experience has been is once an agent gets started and they navigate, they'll begin to pick which way is better for them. Some like the idea of the phone assist, that they're on the phone filling out the information and then they're just sending a text to the client to have a verification, to make sure the client is who they are, and then the special code, and then the client basically puts in their banking information and they text assign. Or you can email the client. And then others like the idea, even though they still may be on the phone with the client, of just sending them that special link where the client can just self-enroll, and the agent doesn't have any signature in either respect, either the agent assist or the self-enrollment. But the difference is the client with the self-enrollment, because it's tracked back to their membership and to that unique URL that the agent has given, so that AFE knows where that business came from. There's no signature on either part, and it's, again, streamlined, and in 7 to 10 business days that client will have actually their certificate. So it's been very seamless. We've been very pleased, and of course you've got the backing of Chubb, which you never have to apologize for, with a carrier of that stature. It's actually their subsidiary company Combined, which is where they do a lot of this voluntary worksite business, but Chubb's the parent company.
You bet. And that's a nice part of it. Gives you the confidence of knowing that what you're working with is obviously a legitimate opportunity and a great long-term solution for people. So that being said, Dennis, thanks a lot for your time today. And more importantly, thanks for all of you on the call. I know, like I said, you have more questions, so go ahead and reach out to us after you get your link. If you have any other questions, of course, the main thing is check out that website link that we showed you, because that'll have a lot of your answers right there. There's a great frequently asked questions as well. So that being said, again, I wouldn't be doing my job if I didn't tell you we've got the best marketing support team in the industry, and we got a great team that does such a good job for you to help you out. So give us a call at the number you see on your screen, 800-842-7799, or check out our website at GoldenCareAgent.com. That's for the agents, GoldenCareAgent.com. And email us at marketing@GoldenCare if you don't have anybody's email already. So we're here to help you. Got a lot of other tools, and if you haven't seen some of our new short-term care offerings, we've got some great products that'll help so many people out there that, again, I'm going to have to get out my handkerchief and start weeping, because I'm so passionate about this. I really feel like it's a necessity for folks like you, and I appreciate folks like you who are out there in the trenches trying so hard to help these aging Americans, because it really is, all kidding aside, it's such an important thing to go out and help as many Americans as we can, as they're all getting older. And I guarantee you, whether you're Republican, Democrat, or anywhere in between, the government's not going to be able to take care of everybody as these folks age. So we got to do our job and help out as many folks as we can. So take advantage of our tools, take advantage of our expertise, and anything we can do to help you, I guarantee you we'll do our best. So thanks, everybody, for your time today. Appreciate it.
Thanks, everyone. Have a great rest of your day, and we look forward to working with you.
GoldenCare is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.